Hey guys, in this video, we're going to talk about gap fills. We're going to talk about what is a gap, how do we know when a gap has been fully filled, and what to look for when we are trading these gaps and how to kind of take advantage of these fills and gap ups and gap downs. Now, exactly what is a gap? Well, you're always going to have a consistent gap up or gap down. Basically, every day, no matter what kind of chart you're looking at, there is going to be gaps. There's all kind of gaps. They come in all sorts of shapes and sizes, depending on news events or just depending on the volatility of that day. Now, if we're talking about a gap up, that means that the stock is trading at a higher price than where it previously closed from that previous session. Okay, so that is going to be just a regular gap up, and they don't have to be very big. You can still have little gaps. So right here on September 7th, you can see that Netflix had a little bit of a gap up here. So this session here, we closed right around, let's just say, that 590 area, and then the next day we opened at 594. So that's going to be a little bit of a gap there for us. Now, when we have gaps that are that small, so you have like what as a $4 gap on a $600 stock, you're not really playing all we need to fill that gap, right? You're not really looking to fill gaps that small on a large stock like this. You're not really too worried about it, but ultimately we will end up filling this gap. And as you can see, as the week progressed, by the end of the week, we fully filled that gap. We had a close below where that close was before the gap. So therefore that gap is fully filled. All right. So even though that was a small gap, we still went down and we filled it. So that is considered a gap up, and then with a gap fill that happened a week later. Now we can have large gaps here. So you can see this circle here. This is coming off of earnings. Tuesday, April 20th, we closed up here right around, let's just say we closed at the 550 area. Now the next day, where we opened? We opened at 507. So that's a huge gap that we just had. Now, large gaps like this, $50 gap off a $500 stock, that's going to be some sort of earnings report, news report, something of that sort where you have gaps that large. Now, this is a big gap that we have to worry about. But people, when you have a large gap like this, usually the next 2 days, people are saying, oh, we got a gap fill. We got a gap fill. Yes, that's true, but it's going to take a lot for us to fully fill that gap, right? So, and as you can see here, we actually pulled away from the gap. So we gapped down and then just stayed down. Our RSI even went down here. We were down below 30 here for a while, just consolidating, waiting for a nice run up higher. And then finally, we didn't fully fill this gap until all the way up here in the month of July. So really about a 3-month wait that we had to fully fill this gap. And you can see that it took that long, a lot of ups and downs in here to fully fill it. A lot of gaps don't fill as quick as this little one here did on the daily chart in the early part of September for Netflix here. Usually you have to wait a little while. So, and especially when you have large gaps like these, you're gonna have to wait quite a bit. I mean, I have seen some times where Netflix has pulled down 30, 40 points, and then bam, the next day just goes back up and fills that gap. Yes, that does happen, but it's pretty rare. When you have large gaps like these, it's going to take a while for us to fully fill them. You can see that we ended up filling. The thing with gaps is we will always eventually fill them. So if you're looking at a gap, don't worry, we will eventually fill that. That doesn't mean buy calls down here and just hope and say, well, we're eventually going to fill this, so therefore I'm going to buy calls. No, don't play it like that. Just kind of keep that in the back of your head. We're eventually going to fill this. So you can see the upper trend line of this triangle right here. Eventually we were going to get back above that at least, or at least touch it. You see we touched it here and then eventually broke it just to fill this gap. That's really all of this was right here, just to fill that one little gap. Now, if we go here at the end of July, you can also see we had a little gap here as well. We closed the day right at 518, and then we opened that next day right at 529. So pretty large gap up that we had, even though this is a red candle on the day. A lot of times that does happen. You always hear about gap and goes. That's more akin to what happened right here. We gapped up and then we just went up the rest of the day. Right here, this is more common where you gap up, you have that high coming in the morning, and then you eventually pull back to where you're red on the day, but you're still above where the previous day's closed was by a lot. So therefore, it still keeps that candle with a huge gap from the previous. So you can see we closed right at 527. So this is another example of a gap. This is probably your most common that you are going to get, where you get that gap up, everything hits those highs in the morning of the day, and then everything starts pulling back throughout the rest of the day. So you can see here, nice little gap up. We climbed up on the day, and remember this right here was to fully close the previous large gap that we had back in April. And then after we did that, just kind of pulled back, and then until we fully filled this gap right here. And you can also see where we gapped up was basically a resistance that we had in the past here. So when you're looking at gap ups, gap downs, usually that gives you a nice little key area of resistance or support going forward. So you can see right here, resistance, resistance from the gap, resistance, resistance, support, support. So they usually give you some nice key levels in here when they are gapping. It's kind of what it's playing what the investors are giving you, right? So that's more or less what you're kind of looking at when you are playing gaps. So again, here on the Netflix daily chart, you are going to have multiple different gaps come in all shapes and sizes. Just keep an eye on all of them. See if you can kind of determine, okay, was this from a big news event? Why did it gap down this much? What's happening? Earnings report. And then that kind of gives you a gauge of how long it may or may not take to fully fill that gap. Where you have small gaps here, it's going to take probably, 3 weeks or so for us to fully fill that. Where you have even smaller gap ups here with a gap and go, like, okay, we're going to pull back here in the whole market, and then we fully filled it very quickly. So just kind of keep an eye on all of that. Just it's all about repetition. That's really all it is. So when you see a large gap down like this, okay, I've seen this before. Even though 1 out of 10 times I've seen this, it recovered quickly the next 2 days. Most of the time, 9 out of 10, it's going to take a while. So right here, okay, I'm not loading up on calls just yet. I'm going to let this kind of settle, see what's going on. And then once you get that higher lows coming in, then okay, now I'm ready to get on this. And then that's when you start buying calls in here, rather than just jumping the gun back here after a large news event and a large gap down pullback. So it's all about repetition. Just kind of see this week when you're playing the charts where you're gapping up, where you're gapping down. You always want to look for gap ups and gap downs on larger charts. So you're looking at daily, 4-hour, hourly. Look for the gaps in there. Look for certain news events and see how long it takes us to confirm a gap fill on those gaps. All right, guys, thanks for watching. Make sure to check us out on our social media. We have attached the links to our socials in the description. And we also have a trading service if you're interested. There's more information in the description below.